Hi, this is Michael with backtothefuturetrading.com, and I want to talk to you a little bit today about using predictive indicators in the constraints of a trading system. And it's real simple when you come at it from a rules-based system, and I think when you employ filters, things get much easier. Let's take a look at the risk disclaimers here before we start. The U.S. government required disclaimer. Commodity Futures Trading Commission. Trading financial instruments of any kind, including options, futures, and securities, have large potential rewards, but also large potential risk. Don't trade with money you can't afford to lose. The National Futures Association and CTFC required disclaimers. Want to make sure that you know that you should not invest money you cannot afford to lose. Hypothetical or simulated performance results have certain limitations. Please familiarize yourselves with those limitations by pausing the video and reading through CTFC Rule 4.41. All information in this video on the website and anything that we teach is for research and educational purposes only and is not intended to provide financial advice. Please keep in mind that we are not commodity trading advisors. Given that representation, all information and material provided by backtothefuturetrading.com and any associated companies or employees is for educational purposes only and should not be considered rather specific investment advice. Turn the music off. Okay. So, here's a typical flux histogram. So keep in mind, before the market opened this morning, we had these histograms telling us what to expect when we arrived at these times, or anticipated moves that we were going to expect for the entire morning U.S. session. So let's look at the times between 8 o'clock and lunchtime. So if we start around 8 o'clock this morning, here's what we would have had opportunities to do. And again, keep in mind, as of this morning, there were no bars up here. This whole screen was blank. We're dealing with future indications. Let's get bang, 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 bang. And we'll make it white. There we go. So as of this morning, when we were coming into 8 o'clock, these were the histograms telling us what to expect: selling pressure, buying pressure. And as we come into the very first signal at 8:05, we were right here, and this is a plain Jane pattern 1 buying pressure signal. When we see those, here's how we treat them inside of the constraints of the Caveman trading system. Number 1, I put a stop 1 tick under the dot, which is 3 ticks from the low of the time candle. So if that's the case, our stop would be 1 tick underneath the dot. The entry would be the close of that candle, right here, market or limit. So once we know the risk in the Caveman strategy, we're going to employ that gap to use for a reward. And so what I would do is I would take the stop, draw it to the close of that candle, and now I have 2 fibs that I use and I teach my students. One is the 150% fib and the other is the 200% fib. So we're risking X to make 2X. Risking X to make 2X. At 150%, that's when we move our stop to break even. Okay, so inside of this rules-based strategy, we're using dots just below the dots as stops, just above the dots as stops, in the direction of the trend. My trend is set to a 120 period exponential moving average. And as you can see here, you would have been in an entry that moved in the direction right away. And had you been filled at market. We'll just crawl that up here. You would have had 10 ticks. Now in this system, just so you know, your max risk I teach should be around 10 ticks because most traders can handle losing $100 per contract. Your minimum risk, however, is no smaller than 5 ticks because in CL anything smaller than that and you're sort of asking to get nailed. Now the trend is up and we're watching for the next trend entry, which at this point, had we been filled on our target rather, we would have known looking at the histograms that the next signal in the direction of the trend, if it stayed up, was at 842. Okay, so follow me along. We arrive at 821 and there's nothing to do. 821 is a counter trend signal. When we arrive at a selling pressure signal in an uptrend, we're generally going to expect sideways motion or a small down move. Okay, so we're going to wait for that sideways motion or a down move into 842, and there it is. Ding. Now over here at 842, you'll see the candle closes at 45.65. Okay, 45.65. Pretty sure. Yep. And now we employ the same rules. There's the stop, 1 tick below the dot. So the dot was at 61 ticks. Stop is at 60. The entry of the candle is the close of the candle, which is at 65. So the stop, the risk here, is from 60 to 65, which is a 10 tick risk, which is identical to the first setup. So I'm going to come over here and move just like that. And now we're looking for the market to hit 73 for break even and 75 as a target. Let's see what happens. Ding, ding. So the second setup, at the time we've been waiting 5 trading days for, gets us again straight to target. So up 20 ticks, hypothetically. And now we know the trend is still up. The next trend signal is coming at 8:53, and so at this point in time, it's 8:48. So you got 5 minutes to get up, stretch your legs, maybe do a sit-up on the couch, a crunch or two, so you can stay sexy for your spouse. Waiting 5 minutes. Ding! 8:53. Same rule set. Your stop goes 1 tick below the dot. The dot is at 68, so 67. Your entry is the close of the candle, okay, which is 71. Now, this risk is 4 ticks. Minimum risk is 5, so I'm going to move my stop to 66. So 66, 5 ticks. Again, we're going for 10, so I'm going to move my little targeting system right there. Let's see if we hit it. This buying pressure is supposed to last until about 9:05. Ding! Break even. Ding! Target filled. So now after 8 o'clock, we're in about an hour. We've had 3 setups in the direction of the trend, and all 3 of them have moved immediately in the direction of the time pressure signal. Trend is still up. We're waiting for 9:14 at this point. That's the next buying pressure signal. At that point, your target was hit at 9:01. You've got 13 minutes to refresh, go outside. I know what time the trade is coming up. Maybe have cafe mocha latte. All right, time's up. We're waiting and watching and waiting. There's the 906 selling pressure signal. Market goes sideways or moves down. And then right here, ding, 914, signal with trend. Again, same rules. There's the dot. The dot is at 75. One tick below the dot is at 74. The close of the candle is at 79. 74 to 79 is 5 ticks. Once you know the risk, you know the reward. So we're going for 10. Let's see what happens. Do 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 do. Oh, it's going up. Do do. And it hits the stop. Womp 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 womp. But the good news is we risk X to make 2X. So when we do get stopped out, the risk is half the reward. So we're -5. Now, we're moving towards the moving average. We have a selling pressure signal here. Next buying pressure signal is at 926. Ding! Now this one, the risk is less than 5 ticks because the dot is at 67, which means the risk is from 71 to 67, which has to be 71 to 66 to make it 5 ticks. We'll move our little como se llama down here. All of our trades have been, or setups rather, have had 5 ticks. Risk to reward. Boom, 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 boom. Womp, 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 womp. -5. Right at the open. Okay. 2 steps forward, 1 step back. 2 step forward, 1 step back. We'll go ahead and log this one. Very comfortable with that so far. Okay, now the trend is starting to be down. And we have our first pattern 4 setup. Normally, if this signal was a straight out pattern 2, and I'll put a link to our list of patterns in the video description so you can download them and see what I mean by that. A pattern 4 is a lower low red dot, a lower low selling pressure signal. And when we see these categorically, what has a tendency to happen is the market tends to push back, like a pullback against that down move, at least initially. And so historically what we would be watching for is we would be entering short at the close of this candle. And our stop, just kind of like opposite of what we've been doing, would be 1 tick above the dot. Right? That would be the normal procedure here. But because this pattern 4, this lower low red dot pattern exists, things kind of transform a little bit. And let me show you how. So ordinarily your short would start at the close of that candle. We'll make it a neutral color here so we can see what's going on. And then your stop would normally have been 1 tick above the dot, right here at 68. Okay, so because of this, I wait for a pullback. And so right now your existing risk is 7 ticks. But because this is a pattern 4, I want to wait for a pullback. So I move my entry to the dot. And I tell myself I'm going to wait for it to pull back to the dot with a 7 tick risk. Okay, so everything shifts up for a pullback with a pattern 4. Now watch what happens here. Pulls back and gets filled at the dot. I have a 7 tick risk, so what does that mean in terms of my reward? Right? Let me get this thing over here. I'm going to flip it the other way. So there's my risk. My reward is 200% of my risk. And so now I'm waiting for it to do what? I'm waiting for it to come down to 150 or 200, and let's see what happens. Doesn't hit the stop. Coming down. Doesn't hit the stop. Coming down. Doesn't hit the stop. Coming down. Ding ding! So all along the watchtower here, we took a little heat, but it never hits the stop and comes down to our 150 and our 200%. So this pattern 4 signal is important, right? That's why you have to learn the difference between a straight pattern 2, a selling pressure signal, and a pattern 4. So let's log it. We had 7 ticks of risk, which means how many ticks of reward? That's right, 14. So we'll get rid of this thing. We'll move it down. We don't have to have our risk there anymore. So now, just to review, since 8 o'clock, we're plus 10, plus 10, plus 10, minus 5, plus 14. Trend is still down, so the next signal coming up in the direction of the trend, which is down, would be 10 o'clock. And let's see what happens. It's 10:56, so we have 4 minutes to relax. Maybe go grab a glass of orange juice. Look outside at the neighbors. I wonder what Bert's doing out there. He mowed his lawn 3 times this week. Oh, 10 o'clock is coming. Time for a trade. I better get back to it. And boom, 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 boom. Ding. So this is a plain Jane straight out pattern 2 selling pressure signal. Okay, so same rules apply. Close of the candle is the entry. The stop is 1 tick above the dot. And so if we move our crazy risk reward calculator over here, there's our entry. There's our break even, there's our stop, and we'll just move it forward. 1, 2, target filled. Okay. So we'll log that one. Close of the candle to the target. 12 tick winner. All right. So the next signal with trend comes at 10:09. It's 10:04. We have 5 minutes. Come back to the computer nice and refreshed. Boom, 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 boom. Okay. So at 10:09, same rules apply. Close of the candle. Stop is 1 tick above the dot. That puts it at 55. Once you know the risk, you know the what? The reward. So we'll go ahead and move our craziness over here a little bit. Take our calculator, close of the candle, 1 tick above the stop, 65. So we're going from 48 to 34. Let's see what happens. Not yet. Not yet. Not yet. Not yet. Break even is hit. Target acquired. So we have another winner. So we entered here and we got out there. And we knew those times were coming, right? Now the next signal, I don't want to kill too many of our surprises, but the next signal is coming at 10:29. You're out at 10:20. You've got 9 minutes to do whatever you want. I wonder what I want to have for lunch today. Should I get the Subway chicken teriyaki flatbread or go all out for the meatball parm? Maybe the meatball parm. Oh, it's almost 10:29, getting ready. We come up on the signal. Plain Jane pattern 2. Again, very simple rule set when you trade a caveman style system. So simple a caveman could understand it. Close of the candle is your entry. 1 tick above the dot is your risk. Once you know the risk, you know the reward. So it's about a 6-tick risk right here, 7-tick risk, same as the last setup. And now you'll see that it comes up and hits the stop. Now, what do we love about this style of trading? Your risk is always half your reward. So in this case, we only lose 7. Now, at this point, it's 10:35. When's the next signal? 10:55. Are you going to sit here and stare at your screen for 20 minutes, get your brain tired, wonder what's going to happen next, worry about stuff, watch every bar, get that glazed fisheye look at the screen where you become a zombie and overtrade? No. Go live your life. Ding! 11 o'clock, signal with trend. Candle closes at the moving average, not under it. So we're going to look for a stop 1 tick above the candle. Dot right here, so instead of 53, it's going to be at 54, the stop. Once you know the stop, you know the entry is the close of the candle right here. Once you know the risk, you know the what? The reward. So the most we can lose is from 49 to 54, or 5 ticks. Now watch. No stop hit. No stop hit. No stop hit. Come on, baby. 150%. Target filled. Let's log it. So the behavior pattern that we've been waiting for the banks to execute kicks in all the way down. 10 ticks. Now, the next setup is coming. We have until 12 o'clock, and there are 1, 2, 3, 4, 5, 6 times until 12 o'clock. And so this signal with trend worked. This 11:13 signal is against the trend because the trend is down. And we're watching, waiting for 11:20. And here comes 11:20. And where have we seen this signal before? It's a pattern 4. Pattern 4, lower low, red dot. And now we do those same machinations that we did before. Normally we would enter where? Remember this setup over here? Normally we would enter at the close of the candle. Ding! Our stop would be 1 tick above the dot at 33. Ding! Once you know the risk, let's measure it. And you can do this real time. It's actually very simple. From here to here. The risk would have been 6 ticks, but because it's a pattern 4, we move our entry up to the dot. Our entry is now at the dot. Our target is 6 ticks above it at 38. Ding! And so now, once you know the risk, you know the what? Reward. We'll go ahead and just lock that in. And we'll watch and see what happens. Filled. Target filled. So it pulls all the way back to the dot and then drops all the way down to target, which is typical of a matrix signal of a pattern 4 lower low red dot. So let's log that one. Close, or the fill is right here. And the target is there for another 12 ticks. Now, trend is still down. When's the next time? 11:35. At this point, it's 11:25. You have 10 minutes to do whatever you want. I think I'll go to the bathroom. I'm going to comb my hair. I might even make a sandwich. Ding! Next signal comes at 11:35. Plain Jane pattern 2 selling pressure signal. Your stop goes where? 1 tick above the dot. Your entry is where? Close of the candle. Once you know the risk, what do you know? You know the potential reward. The risk right now is from 28 to 23. 5 ticks is the most you can lose. Let's see if it hits our 10-tick target. No, stopped out. No soup for you. Boom. Log the loss. There's no such thing as a trading system that doesn't have a loss. There's no such thing as a trading system that doesn't have a drawdown, right? Okay, we're waiting for the next trend entry signal. That's at 11:45. A couple of minutes, so we're not going to leave our computer. We're going to wait for it. Ting! Trend is still down. That's a selling pressure signal at 11:45. Remember, close of the candle is the entry. 1 tick above the stop, red dot is the stop, so that would be 4 ticks away. 38 to 32 is 6 ticks. Once you know the risk, what do you know? Once you know the risk, you know the reward. So 6 ticks of risk, shaping up to be the last trade of the session. There it goes. Boom, 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 boom. Target filled. Target filled. I just had the target filled. I love the caveman strategy because it's so simple to understand. And now you're done because there's no more setups until 12 o'clock. You can go live your life. You're finished. Market can do whatever it wants now. 4 hours are done. Lunchtime. I'm gonna call that sexy widower down the street. Saw her checking me out when I was mowing the lawn the other day. Said, Ruben, do whatever you want because you followed a rules-based system. And that's the key to all this, really. So if you lock it all up and you look from 8 to 12, look how many setups you had. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 setups in 4 hours. So that's 3 setups an hour. Can you handle that? Can you handle a trade every 20 minutes? I think so. It's easier when you know when they're coming. So the Flux is the only software that tells you in the future when to watch for a setup based on institutional behavior patterns. And we're just waiting, laying in wait to see if they'll do what they normally did again. And on average, we see probably a percentage, a win rate upwards of around 45 to 50%. But with a risk-reward ratio of 2 to 1, now the math starts to really play out, right? So if you just add up the hypothetical, and these are hypotheticals, right? You would have 10 plus 10 plus 10 minus 5 minus 5 plus 10 plus 12 plus 14. And this is, looks like, what was that? Minus, come here now. Minus 7. Minus 7 plus 10 plus 12 minus 6. No. Minus 5 plus 12. So that's 78 ticks. Okay. Figure with slippage and commission and all that craziness, it's at least 50 ticks, right? How do you feel about that? Michael, I feel good. You have to feel good with a rules-based system that's based completely on time. The banks don't like when you follow rules. They don't like when you know what they're about to do in advance. And they don't like that you execute with any kind of discipline whatsoever. They want you off balance. They want you on the balls of your feet. They want you making rash decisions, not really knowing what they're about to do next. So, one example of a rules-based system Caveman strategy. I'll put a link to it in the description here so you can go back and watch one of the training videos that we teach our customers to start out with when they first start using the software. And if this is something that you like the idea of knowing what's coming next, having a chance to clear your head, walk away, how much time you have until the next setup, knowing when to trade, then give us a shout at backtothefuturetrading.com. We'll be happy to help you out. I knew that I would. Turn the music off. Little silly tonight, but I hope you appreciated the lesson. I'm Michael with Back to the Future Trading. We'll see you guys on the flip side, ladies, as well. Welcome to the world of institutional data mining. I hope that you'll take advantage of this method and use it in your own trading arsenal. Have a good one.